Thursday, February 15th, middle of February. Stan Ehrlich, and this is market analysis. You guys know I start out with the stock market indexes, which is exactly what I'm doing again today. Then I go into the futures market. Now, I have begun as of yesterday to use NinjaTrader daily and short-term 1-minute charts to explain my analysis of the markets, to use for my analysis process of the markets. And with these ninja charts, they do look a lot like the TradeStation charts I've been using forever, decades. And they're very, very satisfactory, but there's a variety of other reasons I'm shifting over. I've got my support and resistance levels marked with a yellow, or you may look at it and say gold, zones, or a little band across the bottom or tops of price action as need be. And I'm sure that I'll be adding and subtracting these support and resistance areas over time, as well as trend lines and so on. But I've gotten to the point where this is good enough for the YouTube show, so let's go. Today, we've got, and you can reach me at info@ersignals.com, that email address right there. So I didn't want to grab it and move it over. So what have we got today? And I'll show you a short-term chart in a moment. A little bit higher. At the moment, we're up 1050 and a little bit above yesterday's high. And this, again, is the March E-mini futures contract, specifically the tradable futures contract. We did not have a gap down like we did on the Spider SPY, like we did on the DIA, and like we did on the QQQ, because they don't trade almost 24 hours a day. The E-mini, as you probably are aware, and there are millions of transactions in this thing every day, so a lot of people like the ES or the E-mini. It trades 23 hours a day for in California until 2 o'clock in the afternoon, and then reopens an hour later, 3 o'clock in the afternoon, and it's the beginning of the next calendar day, which it really isn't, but it is. It's the beginning of the next session, which is labeled tomorrow's date, if you are 3 o'clock in the afternoon California time. So no gap on the E-mini because it almost never closes, like forex. Forex never closes except on the weekends. All right, you'll see a gap in a minute on the Spider. That's why I'm mentioning all this. It's coming back up to a price level which on other charts, and here we go with the E-mini 1-minute data, there's your high of today's session, or today's date so far, and that was at 5:53 a.m. California time before the 6:30 normal opening, and we are trading close to the high of the day. Yep. And I have I'm a liar. I admit I goofed up. I didn't drag it to this current data. Sorry. I was almost exactly correct. And in fact, I was about to say that rally high has closed the gap. And so now there's no real reason for it to rally up more. If you're looking at the Spider, the correlation time-wise and price-wise matches, and it tries to close more of the gap that doesn't exist anymore, but on the Spider chart, and stops on the E-mini chart, and has just a minute or two ago done the exact same thing. So we are developing a resistance level that may or may not work. There's no guarantees. If we start to head south, and probably the level I'm mostly interested in is 50.13. We start to trade below 50.13, you're almost at the low of the day. You'll be, after the fact, closed a gap on the other indexes. We'll see in just a minute. And starting to slip, in my opinion. That's exactly what I think might happen. And this is so timing-wise ridiculous, accurate, if I'm right. Doggone it, I got the wrong one. Sorry, I got to get a little bit used to Ninja here. This is 1, 2, 3, 4, 5, 6, 7 minutes after that last high right there. And we're coming up a little at the moment, a couple of ticks. So we will see. Now go to the spider. There's the gap on the spider. I'll bring it into view much better. So gap down on Tuesday, big time. That was because of the CPI core and CPI number that were pretty bad. But that's now in the market. It's been absorbed in the market. That move down is now ancient history. But it's still relevant because of the gap. And will it be enough from a longer term point of view to keep this market from going up much more? Or was that the top on Monday? I happen to think that was the top on Monday, right up here. 503.45, give or take a couple of ticks. Hard to be exact with the cursor and the mouse, but I'm very, very close, I'm sure. So I think that we're at a spot right here and now, literally, where we might just stop and turn down because of the gap closure. How far down? Well, my first objective to the downside is 478, let's call it. And I can't rule out 466. And frankly, I don't think the big yellow or gold zone, my support level, major support level, is going to be reached. So I am looking for a short term, a week or two, downside technical correction in a long-term bull market, period. Next chart. This is the 1 minute chart on the spider, SPY. It does not open until 6:30 California time and closes at 1 o'clock p.m. California time. So, or Pacific Standard Time, PST. We bumped against the previous high this morning a little while ago. I mean, 15 minutes ago. And it so far has stopped, but it really hasn't gone down much. And we're just so close in time and so close in price. I can't really tell if I'm going to be right or not, but this is exactly the situation I think we stand a good chance of starting to slip more. Again, making a low lower for the day is going to start to raise my eyebrows that I'm going to be right to a much more profound degree. Obviously, I've got to get below yesterday's lows for really, really big, important signals, which I doubt is going to happen today, and then make new lows for the week. And I'm on my way down. That means we'll be making new lows for well over a week, if not 2 weeks, by the time that happens, and we'll be heading south. Next chart. This is the daily data on the DIA, the Dow Jones Industrial. And at first, I'm showing all of you about 14 months worth, a little over a year of daily data on this candlestick chart. What you really want to look, by the way, for is on the candlestick chart, and you immediately notice it's not a normal one. I have a lot of white bars because I don't care what happens on those white bars. I like to look at yellow first. Yellow means on the way up, you're getting overbought. And the RSI will show you that, or you were either overbought or oversold within the last few days. In this case, we were oversold a few days earlier, down here, just barely. So it turns yellow, and it stays that way for a few days. Why? Because from yellow, I could change to either red or green and get an absolute buy signal, my ER signals, which we did in overbought conditions here. That trade didn't work, period. We did again here. That one didn't work, period. And there's small losses involved. I don't keep my trades very long if they're not working. I get the heck out of my trades very quickly if they're not working. If they are working, I don't see the rush to get out. Limit your losses and let your profits run. I repeat, limit your losses, but let your profits run. Your trend is your friend. So when you get trend changes, which I frequently do with these red or green signals, that third red did work very nicely for well over a week. I'm not showing you the exact trade. I'm showing you the signals that cause you to potentially make a trade. That one was smack dab on top of the market, red. That one was very close to the highs, and it did work because it didn't ever make a higher high. I think it didn't. It's kind of behind the yellow zone here. But this green on the bottom, great. Now, those are the things I look for. And that's a combination of a custom relative strength index at the bottom here. This is not Wells Wilder's original RSI. It is my version of it. I learned RSI from Wells himself and stochastics from George Lane and Bollinger Bands from John Bollinger and so on. I was in the lecture circuit starting the late 70s until, well, really the millennia. So for quite a long number of years. And those other guys were right there in the same group, in the same cities, in the same hotel, lecturing the same group of people, blah, blah, blah. Okay, gap is closed on the DIA on the rally this morning, plus a little bit more. Let's go into this much tighter. And you can see my horizontal cursor is around the high of today, which is a little bit above it, and that's fine. Now, all I need is for it to go down, and I'm going to be very, very happy. Next chart. The QQQs, the same story, maybe at the moment with modifications. Let me zoom into the gap thing here. The gap would be closed right there, and it looks like we may have just barely missed the QQQ gap closure. I'm going to zoom in even more. The low on Monday was, we just missed it. The high in the QQQs today is not quite high enough. Therefore, I have to allow for a little bit more strength in the Qs to close the gap. Maybe this is good enough. But if that's true about the gap closing in Qs, then the DIA and the spider might make new highs also. Probably would. There's nothing wrong with that. It just makes me nervous because the spider and the DIA did what I wanted it to do pretty damn accurately. And now they're set to go down without any more rally. But the Qs didn't quite get the job done, but most of it. Sometimes gaps are almost closed. We'll see what happens. But the same story here. I'm not really bearish. I am looking for a short-term, modest downside correction to the support areas that I've got marked. Excuse me. So that would be on the QQQ down to 412, 413, maybe 395, and a much more profound, longer term zone of 387 down to about 380. Next chart is the NASDAQ futures. I will go back to the NASDAQ futures. Same story, but there's no gaps to close because it's the futures contract trading, you know, almost 24/7. Well, 24/6, 5.5, whatever. So, next chart. Now we're getting into bonds. Drop to new low ground Tuesday. Hit the support area and nosedived into it, but bottomed out at the bottom of the support area. It could have, like the last time, bounced off of the top of the support area, or for that matter, kind of anywhere in the middle. It's just a zone where in the zone at the high or low in particular, it could turn around, and it did at the top the first time down and at the bottom Tuesday. And so far, this rally is a little feeble. We're not staying near the high. We're back into the zone. And if I'm going to turn bullish right away, immediately, I'd like to see this thing close stronger and near the high of the day. So I have to allow for the possibility of it dropping below the zone, below this week's low so far, soon, within a couple of 3 days. But that's not terrible, although I don't have anything at the moment marked for the next, probably down here. Yeah, that one's definitely going to be it. Let's just put a line there real quick. Control copy, control paste, drag the new zone down, and make the top of it a bit skinnier. I don't like that big thickness here. That's good. That's good. Okay. So that is the lower level. We just might get to 14 and 2/3. Let's see if we can break the support first. Next chart is the 10-year notes. Well, it bounced off the bottom of support twice and then started to make a new high, but couldn't do it. And that was 2 weeks ago. Then it breaks down to the bottom of support again and holds for a few days. But that gets broken, boom, on Tuesday, the CPI number, and drops like a rock, manages to hang in there on Wednesday, and today's Thursday. We get a little bounce. But now the problem is the resistance area, and then maybe new lows by a little bit, just like in bonds, and then back up again. I am not bearish on interest rate futures. I am looking for another major turning point to the upside, which could be profoundly important because us market followers realize that the Fed did tell us if the numbers in CPI wasn't that good this week are good, and it wasn't this week, but in the future, probably the other numbers are going to come out neutral to good, support the bond futures, start to make them rally, and we'll be looking at a much stronger market in the second half, let's just say the second half of this year. Between now and then, there's some chances you're going to see some minor new lows, a little bit, not too badly, but the real longer term important thing here is watch for a major turning point if you can see it as it happens, and I'll try to scream bloody murder for you on that day. Crude oil. Up against resistance this week, couldn't go any further. Trying to break down earlier today, but it's completely recovered. I got to be a little neutral here. I really can't come to the conclusion it's immediately going to go down or make new highs. Because of the upward slant, and I drew a little line under the lows here, and it's not a bad one. 4 points is pretty good. You got to have 2 by default just to start it, remember. 3 is nice, 4 is better, 5 is excellent, and more than 5 is fairly rare. So 4 is good. That bull trend line, if it holds, is going to squeeze prices eventually into minor new highs, but it probably won't take that long, meaning, way off here in time. So I'm looking at, thank you very much. No comment. I just have to wait for something. Next chart. This natural gas went sideways forever. Finally broke out to the downside in November. Big move down, no surprise. Got very, very oversold with a 7.8, which is extremely oversold. Unfortunately, I did not get a green buy ER signal at the very bottom. And I am looking for this resistance level to stay resistance. And I'm looking for this new oversold condition at 13.12 to start another rally. And we're a new low ground price-wise. So I've got a couple of levels here where it could very well stop moving up, and that's close by. 1.7 is my first. That's too close. So I think it's going to get above that without a problem. This one looks a lot more likely. 1.9 is my short-term, intermediate-term, short-term upside objective, and then we'll see what it does if I can get there. Next chart, heating oil. A wide, wide, wide area of resistance. I'm probably going to do something here. This is a little bit too much. Let's make this 20 opaque wise. Uh-oh, I made a big mistake. I am sorry. I know how to correct it very quickly. I think I made it 300. Yep, I certainly did 100. And I meant to make it something like a 10. There we go. Sorry. And I can't come to the conclusion any one particular level is a great one. So we're in a major resistance area. The market has shown very broad, not that useful reasons for topping out in this zone. And here we are again. Therefore, I think we're building a top. If we start to break out to the downside, which is not going to happen today or real soon, then I'm going to get very, very bearish. But between now and then, I think it's topping out, and about the best I can say. Next, gold. In support on the way down, but I want to bring to your attention some whoppers. Every time I've got a red circle, that is at the top an ER sell signal. That is an ER sell signal. That is an ER sell signal. 2 out of 3 so far are the exact high day for a good rally up and a big move down, or some kind of move down. Unfortunately, not in here or here or here, but this one is also a fantastic sell signal right there. Buy signals right at the bottom, to the day, right at the bottom to the day, and right at the bottom to the day. Now, that's a wide selection of buy and sell signals, all happening, I believe, in 2023. Am I going to get the same results this year with gold? I don't know. I hope. Last year was a great year for the signals for gold and silver. Keep your eyes open. Let's see if they start to produce good results again, like last year. That's 1, 2, 3, 4, 5, 6, 7 major turning points just last year with this particular technique. Okay, oversold, no bullish engulfing, a little bit of a rally. That's about the best I've got for gold. Kind of neutral to a little bit bearish, looking for a downside breakout. Next chart, silver. The circles, again, are showing you signals. I don't have them marked with the strategy automatically running. I just put a circle around the bar. That was a bearish engulfing in overbought conditions in one of my ER sell signals. Again, 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 and again. Now, that's a double top in silver. Both of them, unbelievable. Both of them had major bearish signals for me. Bottoms, wow. That is a bullish ER buy signal. It produces a trade automatically if you follow the system, and that's the wrong way to say it. If you let the system do automatically what it's supposed to do, that's when you would have bought. Yes, on the day it happens, it does not necessarily, to most people, look to be important for a buy signal. To me, oh, heck yes, it does. Same thing happened there. Same thing happened there. And those are my 3 huge buy signals. Too bad I didn't get a lot more in silver. What happens now? Like gold, I'm a little bearish. I think it's going to break down, and for the moment, neutral, and maybe a little bit more of a rally. Today's a pretty good up day at this point. Next chart. I've got to go a little faster. I'm taking a long time, partly because I'm changing to Ninja charts, and they need a little bit of more explanation at first. That won't be the case in the future. It'll go much quicker, and there'll be more markings and trade lines and so on. Support is holding. Minor new high for about a week or so. Unfortunately, did not get oversold, so I don't trust this rally. Now in a resistance area again. So maybe we're going to get a little more strength, but the longer term situation certainly appears to be likely to make new lows. Maybe in a few weeks, couple of weeks, 3 weeks, 4 or 5, 2 months, but pretty soon. Next, high grade copper, HG, support held, past tense. Rally in progress, minor new highs. You are between the rock and a hard spot, and I probably should label this the rock and that the hard, whatever. But neutral, little rally maybe, back and forth, like it's been doing for a long time in this trading range. No long-term breakout yet. The attempts to do so didn't work up here and then down there. So got to keep talking about sideways. Next, soybeans, now the grains. New low, likely new low close way down here today at 1160. And that has now broken the lowest lows in the soybean continuation contract ever since the market got down there on, looks like July 22 of 2022. That is almost the exact same low as today's low. And we are super close to oversold. We're about to turn back up, I think, in a support area around where it opened. Yeah, beans probably are pretty damn close to turning back up again. Now, a close below this support area, below the bottom of the zone, is really bearish long term, very bearish long term, and could drop the market down to, I'm going to say 10.50 in a broad sense, and I really can't rule out below $10. A lot below $10. 9.30. Yikes. Huge multi-year top is in danger of breaking out bearishly. Next chart. Oil, soybean oil. Cattle, sorry. Looks like these might be out of sequence. No, okay. Cattle. Am I got this right? I think so. Okay. Turning bearish, resistance stopped it on the rally, looking for lower lows. Whatever this is, I'm pretty sure it's cattle. Otherwise, not too much to say. Rocking a hard spot. Next, soybean meal. Or no, I'm sorry, this is oil, soybean oil. So something got goofed up here. It's because I'm not used to these, and I apologize. This is obviously in a bear trend, and I'm pretty sure this is soybean meal. About to make new lows for the trend. They use different symbol criteria in Ninja that they do in TradeStation, which I'm extremely familiar with in TradeStation. So I'm goofing up a little here. But this definitely looks bearish. Next chart. Meal. So that was oil. Soybean meal at support. Looking for a bounce, almost oversold. So not quite in my opinion, but at support. I think it's about to rally. Next, corn. Oversold point blank, 15 on the RSI scale. Very, very oversold. This should start to rally. I would say a small to medium-sized rally any time, including today before the close, although it does not look likely. So I'm watching for a bottom. I'm watching for buy signals. I'm watching for reasons to believe it hit a low. And I do think it's very, very close. This support area goes back a long time. We are now in corn, where I think soybeans might get to a long time from now. Next chart. Wheat. At previous lows for all practical purposes. It's now showing definite weakness. For the last couple of weeks, I thought I saw the makings of possible bottom situation. That is starting to disappear very quickly. Looks like we're going to stay down here, and that's a new low and a new low close since late November. Looking at 2 months and a half. There's not much support left. These two important lows, that one and that one, are in the ballpark. We are on the verge of oversoldness, and if that's a word, and therefore we may bottom out right smack dab at these other lows where we are so close to it's ridiculous. So watch for a turn back up. Do not necessarily expect it to break out to the downside, which it could do. I'm not buying yet. I'm just suspicious that it could start to turn up. And if I'm selling short, I'm late to the party. I should have done that earlier. We're almost oversold. Next chart. HE, heating oil. Is this really out of sequence here? These things may have gotten out of sequence. Oh, live hog, sorry. On a rally, getting a little bit above resistance, but it looks like it gapped up this morning. Now remember, gaps are almost always closed. It did gap up a little this morning. The low is the same as yesterday's high. Therefore, there's no gap. They're almost exactly the same tick, no gap. But it's having a little trouble at this resistance level. It's a little bit above it, but it topped out and didn't stay. It got up there, and the wicks are the only thing that's above the resistance area. The bodies are all below it. So this body has to be slightly, because of the opening, above the resistance, but not much. And I think hogs are about to turn back down again. Next, OJ, unbelievable resemblance in the last 6 days as exactly what happened back on December 31, December 1, 2, 3, 6, and even November 7. Reversal, sell signal, ER sell signal on the top, again on the top, again on the top day exactly so far. This rally in OJ, I think, is going to fail and turn down into new low ground soon. I'm not looking for a higher high, which is what happened after the first big reversal rally. Then it made higher highs, and now that's the all-time historic high so far, the head of a head and shoulder top that developed. That's the neckline. That's the downside objective. It almost was perfect as far as how it acted out of a textbook, almost perfect, but not quite. So now, looking for a reason to turn down. Next, cocoa. I've been calling this a blow-off top for a week, maybe a little more. Blow-off tops don't go sideways immediately after the highest high. They usually just start to go straight back down, boom. This is now the 4th day of it going sideways in almost exactly the same high-low range. It's forming what could be called a little pennant. It needs to break out of this if it's going to have another leg up, which could be sharp and fast, but not necessarily a lot of movement price-wise. Or it's going to be a blow-off top, and it's unusual for it to go sideways 4 days or any amount of time. Then maybe I'm going to get my downside breakout and kaboom, down. Next. That's my opinion. Coffee. Not really much to say here. Resistance stopped the rally. Looked like this trend has now stalled out completely for a couple of months. So I'm leaning in the direction of being bearish, of course. Almost our last chart here. This is a long one, I know. Sugar. Minor new lows. Looking for a test of 22. Last chart. Cotton. Again, commentary below off top. Look at the amount of strength this cotton market has had for the last couple of weeks. RSI got up to an unbelievable 94. Anytime your RSIs or oscillators get to very extreme levels on a year-to-year historical basis, watch out. It's going to turn around very soon in time and probably very quickly price-wise also. You have a great day. Talk to you tomorrow, Friday. Signing off. Thanks for your patience.